What's up, traders? So it's a brand new day, and today I'll be making a quick breakdown of a Euro USD trade that I took yesterday, 24 January, and the trade happened to run about 20R. Yeah. So the reason why I'm making this trade breakdown is because this trade had a unique entry. So this trade had an element of liquidity inducement and a simple Wyckoff distribution theory inside. Okay, so if you really want to learn how I caught this trade combining these two theories, kindly stick around to the end of the video. And if you're not subscribed to this channel, please hit that subscribe button, okay, because I'll be bringing in more and more content that is going to have a very good effect on your trading journey. All right, so kindly hit that subscribe button, turn on post notification, and don't forget to like this video. I'm also concerned about your comments as well, okay guys? So leave a comment in the comment section. All right, so let us jump straight into the video. Okay guys, so let's begin this breakdown. So as usual, I'm going to strip the charts of all these drawings, okay, that I'm going to do it with you guys so that you can understand. And then I step into my higher time frame to see what price is doing. So if you've been following me for quite some time now on Instagram, you realize that I am looking at this supply zone up here to take the sales. Okay, so daily I'm bearish, and then H4, what is H4 saying? H4 is bullish. Okay, so I am working within this recent H4 leg right here, right? This recent H4 leg. So you can see I've marked my demand, which has been breached currently. Okay, I'm looking at some imbalance in here for price to tap in. That is just a tip for you guys. So I can see my H4 has been breached. Okay, yeah, so before the trade, H4 was still bullish. All right, so I'm just going to step into the H1 time frame and see what price is doing. Okay, so on the H1 time frame, what I see is that, you know, price H1 was also bullish before, but then price got breached over here, and so H1 resumed a bearish move. So I was bearish on the H1 and I was bullish on the H4. Okay, yeah, I was bullish on the H4. So after realizing this H1 swing, or this H1 structure, you know, I was working within this H1 leg. Let me change this to red, Valentine. Great. So I was working within this H1 leg. Okay, so I knew that, okay, I have had a break of structure right here on the H1, and I've not forgotten that I am in H4 demand zones. Okay, so mostly I'll be looking for my supply zone within this area. Okay, but I just decided to switch to the 15-minute time frame because you can see I have a criteria for defining my supply, my demand zones, but all these candles were not meeting my criteria. I think the only candle that met my criteria for demand zone was somewhere here, and so for a supply zone, sorry, was somewhere here. So if I should mark my supply on the H1, it's going to be as big as this. Okay, so I decided to step into my 15-minute time frame and see what price is doing. So stepping into my 15-minute time frame, what do I see? I see my 15-minute making lower highs and lower lows. Okay, so if you've been following me on my Telegram channel, I shared this. I was looking at this point of demand of the 15-minute time frame for buys, and then I also give them a notice that we should take notice that price is coming from a 1 hour zone. So yeah, so on the 15-minute we can see price making lower highs, okay, and lower lows, lower highs and lower lows. Okay, so this was my recent 15-minute swing that I was working in. So fast forward, I marked my supply zone on the 15-minute time frame. Now guys, even though the 4-hour is bullish, I'm trading against the 4-hour time frame, but the H1 is bearish and the 15-minute is bearish, so it gives me what I need to take intraday trades just based on the 15-minute time frame. Okay, that is why I'm able to catch constant 1:10s, 1:5, 1:8 on the 15-minute time frame. Just understanding the 15-minute time frame, I catch a lot of these good trades. Okay, and this is one of them. So on the 15-minute, I marked my 15-minute supply zone. All right, we can see this 15-minute. We can see this 15-minute liquidated something here within the Asian equilibrium range. So this is the Asian equilibrium range. I'm going to talk about that in some different video. Okay, so 15-minute is bearish. Okay, 15-minute is bearish, supply zone created, break of structure of the 15-minute, and also a break of structure of H1 over here. So we can see a whole lot of confluences for our setup. Again, mitigation of that 15-minute POI, and that is where we look forward to get ourselves. All right, so I step into 5-minute time frame to refine that 15-minute supply. And what do I see? I see this clean 5-minute IFC over here. So let me take this 15-minute supply off. So I have this refined 5-minute point of interest. So 5-minute refined point of interest. Great. And what we see price mitigating that 5-minute refined point of interest. So yeah, just 3 simple rules: break of structure, return to point of interest or mitigation of the point of interest, and I look for my entry for myself, and that is what I did. So I step into the 1-minute time frame to see what price is doing. So on the 1-minute time frame, we notice a very common retail chart pattern over here. Okay, I think there are even 2 patterns over here. One is the head and shoulder. You can see the left shoulder, you know, head, and then the right shoulder for the entry, right? And then also we can see this ascending triangle. Okay, and what do we know about this ascending triangle? You set your orders above or below. Okay, I mean, you can set that simultaneously, and then which side breaks, I mean, price just moves in that direction. All right, but we can see if you had your buy orders set in here, you would have been taken out either on break-even or stop loss, depending on your break-even protocol. You would have been taken out. Okay, so this is what we call inducement. So those who are selling, we get taken out. If you were buying here on the third touch, all right, if you were buying here on the third touch, you also got taken out. All right, so what do you see after all these sides getting taken out? After all these sides getting taken out with this FU candle, what did price do? Price just came back and mitigated that FU candle. All right, and that's just a simple Wyckoff. I mean, Wyckoff shouldn't be something scary or whatsoever. The most important thing is understanding the application of the theory. It's not about drawing the whole Wyckoff blah 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 and you don't even know what you're doing. Okay, so to me, a Wyckoff is simply equal highs, FU, and then mitigation of the FU, where I take my entry on mitigation of the FU. If it is a downtrend scenario, equal lows, FU candle, mitigation of FU is my entry. So just in this scenario, this is liquidity built to the top. Okay, liquidity built to the top and liquidity built on the downside as well. That is why you see price smash this side before moving in your direction. It leaves you confused. All right, so I'm actually making a series on liquidity. I think the first series is there, and I'll be releasing the second and the third series. Okay, so yeah, this is it. Equal highs, FU, and then my entry was right there on the mitigation of the FU. All right, so I'll be leaving a screenshot of my trade on the screen. On the left side of the screen, my stop loss was 1.8 pips. Okay, you can see it's above structure. Okay, 1.8 pips, and my target. Okay, so I skipped this, but there was some 5-minute demand somewhere here. Okay, so I was actually watching, but then I always know that a higher time frame, so I mean overpower the lower time frame. So even though I was watching, I was just targeting somewhere here. I think my target was here. It was 22.5, right? Yeah, and that was it. So literally this trade took about let's see, took about 13 hours and 53 minutes, so roughly like 14 hours to play out. Very, very simple. I took full volume, 22.5. So I didn't even get an opportunity to take a screenshot because I was busy with other things this morning, and then it just smashed my TP. But you're going to see the screenshot on the left side of the screen, guys. So this is the whole breakdown, and if you really enjoyed this video, kindly like this video. I beg you, like this video, subscribe to my channel, because I'll be giving so much insight into this institutional style of trading, smart money style of trading, demand and supply whatsoever. Kindly subscribe to this channel, like this video, leave a comment in the comment section. So see you next time, guys.